Hey guys, it's March 9th, 2020. I hadn't planned to make another video so soon, but after the turmoil in today's markets, I figured I better. As a quick reminder, this video is for entertainment purposes only. The views in it are my own opinions and does not constitute financial advice. If you're watching this video, there's probably a good chance you already know what happened today, but if not, let me fill you in. As COVID-19 has spread around the world, fear, and in some cases panic, has set in. This has caused a major market correction, culminating in a very turbulent trading week last week. From some of the largest drops to some of the biggest single-day bounces, it was very hard to decide what to do and how to invest. Should I sell? Should I buy into the market? Short the market? Personally, I took it slow and held my positions. I'm currently short on cash, so buying wasn't an option. Every single fund or stock that I owned was down, so I didn't see much point in selling for a loss. But this gave me an opportunity to really pay attention to the way that the market reacted to the new news every day and to listen to the experts. Specifically my main man, Jimmy Chill on Mad Money. That was a really weird way of saying it. If you don't watch Mad Money, I highly recommend it. It's on CNBC. I don't have cable, so I can't watch it live, but every night they post the audio as a podcast. So each morning I take a listen to that. Well, a lot of people started becoming bearish on the market, and I agree, they're probably right. I just couldn't accept a long-term recession. At the end of the day, this was a health crisis, not a financial crisis. Sure, some sectors would be hit hard, like travel and leisure, manufacturing, especially that from China, and the service industry, but the banks would be fine, right? But for all the good that ETFs have done the everyday investor, this sort of panic pointed out a flaw. Perfectly good companies with perfectly good stocks were going down with the ship. Now, while a whole year's worth of gains have been wiped out during this, I refuse to give up my optimism. Surely cooler heads will prevail and the bulls will return. Panic selling will end and we can rebuild from here. But then it happened. After negotiations between Saudi Arabia and Russia fell apart this weekend, oil futures looked bleak. As today progressed, oil prices dropped the most since the first Gulf War, at one point being down 24%. Now, as someone who's moving back to Alberta, this is a bit concerning. This action, combined with the COVID-19 fears, caused something to happen that's only happened one other time in history. Minutes after the opening bell, the S&P 500 fell over 7%, tripping the market circuit breakers. This meant an immediate halt on all trading activities for 15 minutes. Now, I've heard of trading on specific stocks being frozen before. Typically, if some unexpected news is announced that causes a free fall in stock price. I'm not entirely sure how it works, but the trading of the stock will freeze until the market has a chance to react and calm down to the news, and then trading resumes. But I'd honestly never heard of this fail-safe feature. Now, I need to do more research on these circuit breakers. I think it would make a very interesting standalone video, and I'll hope to get one of those out in the next couple of weeks. Well, this timeout in trading slowed the free fall, and when trading resumed, the S&P 500 had a small bounce back up to about minus 5.6%, and finished the day at a loss of 7.6%. Now, I did decide to get involved in trading today. I've been holding a bearish ETF for a few months now. It's been perpetually at loss because the S&P 500 has been setting record after record. I've been holding it, being patient. It's a small portion of my portfolio, but today I was up and I managed to sell it for a 12.6% gain. I decided it would be nice to take a little bit of profit from a day like today. However, my entire portfolio ended the day at a loss of 18.3%. But having only an initial investment of $300, I'm not too concerned about it. To me, this gives me a good learning opportunity to find out how I'd react under these situations, to see how the market really reacts, and how in the future I could profit off of these situations. Now, I'm going to show you on my phone my portfolio.